Okay, so one of my favorite trading strategies revolves around analyzing and identifying a range and then waiting for that range to break. I've talked about this strategy many times on my stream and YouTube videos, and so in today's video, I wanted to specifically break down a few different ways I find these ranges and then attack the breakdowns from them. Now, if we take a look at the queue here, this is a beautiful example of a short strategy and where we identify a range. And, I just use this TOS tool where I look for a rectangular range. And something that I've always talked about is the big sign that I use to identify this type of range or range break is I look for the VWAP to just cross straight through the range. And so on the queue here, you can see the VWAP just chops right through it. We have a high, we have a low, and they're roughly the same distance between the VWAP and the highs and the VWAP and the lows. Now, it's not exact, but it's a nice enough range and an obvious enough range for us to attack the breakdown when it ultimately happens. And so you can see here, what I generally like to do is wait for the range to break, and then I short into these little pops. That way I can cover around the lows and then kind of rinse and repeat that strategy until I build up a cushion or build up some profit in my account. And if we take a look around here, we can find lots of examples of these type of range breaks. There's just a ton to look at, and honestly, they're just really powerful strategies. Here's one where we have this upward range. We have the VWAP going roughly straight through this. We have the top up here, we have the lows down here, and then again, what I generally look for when these ranges actually break, both of these examples were on the downside, I try to short into these little bounces and cover around the lows. And so I would short into this pop or this pop, and then I would cover roughly around here or roughly around here, if that makes sense. And so when I'm attacking these lows, in this one I would cover here, and in this one I would cover there, kind of attacking the range here. And we can build up ranges and then wait for those ranges to break. And again, it's just a really profitable strategy if you can do it correct. Now, it doesn't always have to be a straight chop through the middle. You can kind of trend a little bit up or down relative to where the highs and lows are, but as long as you get this box shape, you can generally wait for a breakdown to happen and then short into the small pops that come after that. And it's pretty reliable as long as it's a security or equity that generally has good sustainable volume and liquidity. One of the ways we avoid losses with this type of strategy is just avoiding the big ranges. If there's a big range up and then a big range down, and it looks like that's the total range of the day or maybe a little bit less, then that's generally speaking not the best range to attack, because with such a wide range, the breakdowns that we're ultimately going to get relative to the range of the day are just not worthwhile enough to attack, if that makes sense. Because we got this big range here, and then when it breaks some, but it's not the big parabolic move you want when the breakdown or breakup happens. And so I generally try to avoid really large ranges like this for that exact reason. To take a look at this example again here, another reason we really don't target these really big ranges where it moves really high up above VWAP and then really far down below VWAP is because the range is simply less obvious. Whenever we're moving in this big range up and big range down, simply less traders see the range, and so they're going to react less when the range ultimately breaks, because a huge part of technical analysis is seeing what other traders see and then riding that type of momentum. And so if the range is less obvious because it's so far above the VWAP or so far below VWAP and then the range breaks, less traders are going to react to it, and it's going to have less momentum because of it. And so make sure to understand that. Another big part of this type of system or strategy is just conditioning your brain to spot the ranges. You'll start seeing the ranges and then the breakdowns of those ranges once you start to really watch for a few of them. And so in this case, you can see we have another range here. The VWAP's not perfectly crossed straight through it, but again, we have really nice highs that have been confirmed multiple times and really nice lows here that have been confirmed multiple times as well. We have a stock that breaks down on the downside and then pops up and ultimately holds that level as resistance. And so again, my favorite method of attacking these is waiting for a pop, shorting it on the bounce, and then covering right around the lows of the day, in this case right here. Here's another example of this type of range break on the upside. You can see with this one, we have the stock forming a range, and you can see the VWAP chopping straight through it, and then we finally get this range to break. But because it had higher volume and it's a penny stock, we then look for the VWAP to follow it back up, and we buy the dip to the VWAP after the range break. And this is really useful because a lot of the time penny stocks can be kind of choppy and sideways at at the opening bell. But if you can be patient, wait for that range to break with volume like Redbox here, and then buy the dips to the VWAP after the range break ultimately happens, it can be a really nice dip buy. And again, in this situation, we're going to be covering around the highs of the day up here. And so we're buying it towards the VWAP after the range break happens, and then we're covering it at the previous highs of the day, in this case once it hit maybe up here. One of the ways we identify when the range break might be happening is we look for the stock to start respecting the volume weighted average price in a specific direction. And so in this case, you can see it started to break down, and once it started to respect the VWAP and hold under that and consistently hold under that for an extended period of time, we know at least a test of this low of the day range here is going to happen, because when the stock starts holding at the bottom of the range, it does have somewhat of a vacuum that kind of pulls it down to get tested. And so when we break down under the volume weighted average price and then we start to hold underneath it consistently, you can see we do have multiple resistance points up here signaling that we're holding under the volume weighted average price. I spoke about it in a previous video. We have kind of this vacuum that starts to pull the stock down, and at least we're usually going to get a test. If we look at this test of the high of the range in this instance, again, we had the sign that it was going to start at least testing those highs when it respected the VWAP here. And so when it bounced off the VWAP and moved up to test those highs, again, we have kind of this vacuum pulling it up, and the range break is not always going to happen, which is why I generally prefer to target bounces or dips after the range break happens so we can kind of target it. And so instead of just buying it right when the range break happens, we're instead going to look for pullbacks and then buy into that and sell on bounces if it tries to break the top of the range. And if it tries to break the bottom of the range, like I've always said, we're generally going to look for small bounces after the range break that we can target like this or like this, and then cover around the previous lows. So in this case here maybe, or here if we're targeting this one. Volume is actually really important when you're looking for these type of range breaks, because ultimately if the range is going to break, you need to have volume present, or it's just going to fake out and come right back down and start retesting the range again. And so with larger cap stocks, I'm usually looking for stocks that maintain and sustain really nice liquidity and volume that are usually volatile, like the SPY, Apple, or something like that. If I'm trading a small cap, I need to be very, very strict in volume terms, because some penny stocks just don't have good volume, but some really break out and start to run, specifically with catalysts. And so I'm really targeting those higher volume plays with small caps, because if not, the pattern will usually just fake out or fail. The cup and handle at the open is another range break strategy that I use in my trading pretty heavily. What it entails is looking for a stock to open up weak, break over the volume weighted average price, and I'm usually buying the dip to the VWAP and then covering it around the high of the day in this instance. And so you can see we pull down some, we break over VWAP, we pull back to the volume weighted average price, which is where I'm buying it. And again, I usually attack the high of the day up here. And so we wait for the dip, sell at the high of the day, and then kind of rinse and repeat that. If the range breaks in this situation, then we can buy the pull back to this range up here where this opening range high is, and kind of rinsing and repeating that type of system until it stops working. Usually when it stops working, it breaks down under the volume weighted average price, and we could just wait for another trend to form. If we look at another example that we used previously, you can see the kind of same thing that we had. So if you want to attack the opening range, this way is a little bit easier. You can see we get the breakdown just like the last example, we get the cross over the VWAP, and then we pull back to it, and this is the dip buy we're attacking. And again, we have the previous high of the day up here, and a lot of the time it's going to at least range up to that high of the day once at least. And so you can kind of attack that range, because again, highs of the day have this vacuum that pulls it towards them, and lows of the day do as well. We talked about it in a previous video, and so that's what we're really attacking here. We're waiting for the range to break, we're waiting for it to hold at VWAP, and we're attacking the range up to the high of the day. Just to give you a longer term example of this type of strategy, it even works on a daily chart or something like that. If we look at the Q, you can see we can identify the range in this movement here, and then again, just like the last few examples, once this range breaks, we buy the pullback or we short the bounce in this situation, and then write it down to test lows. This happens very, very often in both small scale and large scale time frames. And again, if you can start to condition your brain to see these ranges and attack the breaks, again, it can be a really nice strategy to add to your trading portfolio. You just have to have the discipline to wait for the range to ultimately break. Anyways, team, that's it for this one. Remember, I can't guarantee any results in the market. You always have to make your own assessment and trade responsibly, and this is purely for entertainment purposes only. If you want to help support all of our free content, everything we put out is free. Hit the like, hit the subscribe button, and hit the notification bell if you want stream alerts. We day trade live on stream for free every weekday morning, as well as swing trade, invest, and all that good stuff. So be sure to join us live. Also, you can check out Top Step if you want to help support our channel. They're a funded account program in futures, and the futures market It has no PDT rule, instant settlement, and more. And on Top Step, you can learn to trade and try to get funded. And so I'll include that link in the description as well. Good luck, thanks for watching, and I'll see you all tomorrow morning.